Welcome back. In this tutorial, we will review what pattern day trading is and how you can use QuantFu tools to help protect your linked brokerage account from falling into pattern day trader status. Pattern day trader, or PDT, is a designation applied to an account that has traded 4 or more day trades within 5 business days. PDT status applies only to accounts with less than $25,000 in assets and trading on margin. Note that this criteria has been established to be a minimum standard by FINRA, the overseer of broker-dealers in the U.S. Brokers are allowed to apply more stringent requirements, so you should check with your broker if you have concerns about triggering PDT trade limitations. If your account triggers a PDT flag, your broker will no longer allow you to complete any day trades so long as the flag remains. This is an important point to remember, as your broker will not allow you to close any trades that were opened in the same day, even if your strategy or QBot exit criteria is triggered. QuantFu has a few built-in protections to help keep your account from inadvertently being labeled PDT. First, in linked accounts, the algorithms that run behind the scenes for the strategies and QBots that you create on QuantFu are designed so that any trade that the algorithm determines would trigger PDT will be delayed until the PDT risk passes. The delayed close would be executed at the next available opportunity when PDT would not be an issue. Please keep in mind that this delayed close may impact your performance. Second, for all QBots in test mode, QuantFu flags trades that would be considered day trades in the trade history. You will see a small circled I next to these trades in the trade history section. We highly recommend that you test all your QBots before you connect them to a live account. Be sure to check the trade history to see how trading might be impacted by the QuantFu PDT guardrail. Remember that a connected QBot may not perform in the same way as a test QBot. A test QBot will simulate all trades as the parameters dictate without regard for PDT. It will note all the day trades in trade history. On the other hand, a connected QBot trading real money at your brokerage account will see trade closes delayed if there is risk of triggering PDT. Aside from these built-in protections, you also have a few options available to you when designing your strategies and QBots. First, if you select a strategy from our pre-populated strategies, you will likely want to avoid strategies labeled active trader and opt for swing trader strategies. Active trader strategies have a strong likelihood of generating day trades which could trigger PDT. If you opt to build a custom strategy, you could set your bar size to day instead of hour or minute. By design, your strategy will check for entries and criteria-based exits once a day, so there is no risk for triggering PDT. Criteria-based exits are those exits where you have assembled pills into the exit criteria box. Remember that if you enter take profits and stop losses, in lieu of or in addition to the criteria-based exits, these exits may trigger within the day. You may wish to adjust the resolution of your take profits and stop losses, both on your strategies that use them and QBots. A take profit or stop loss of 10 cents on a stock that is valued at $100 is at significantly higher risk of closing the same day it opens versus a take profit or stop loss of $2 on the same stock. If you have further questions about PDT, please reach out to support@quantfu.com.